This is Tom Cloud with this week's Precious Metals Market Update. Today, as I tape this on Tuesday, May the 12th, the European can has been kicked down the road just like we predicted. We're seeing that Greece will go on and pay their $712 million euro payment, but instead of getting $7.2 billion tomorrow, they'll be partial based on how they perform and how they get their finances under control. Remember, we're talking about a country, even though highly populated, only makes up about 2 to 3% of the GDP of the Eurozone. So now we've just seen exactly what we thought would happen. They'll act like they're going to default. They're not going to default, and they kick the can down the road until the end of June, where they'll once again meet, and Greece will try to get the rest of their $7.2 billion payment that they haven't received as of today, which I'm not sure they've received anything yet, but they've set up a schedule to receive partials of that payment as they meet goals of budget deficits and things like that. So once again, we've got to push this story. We'll be talking about it at least through the end of June as we kick the can down the road. Meanwhile, the U.S. stock market and U.S. dollar are selling off. Stock market's off over 1%. The dollar's down 63 basis points, and gold and silver up sharply this morning on the news that this story will continue. So what we want to look at today is the surprise interest rate cut by China. That is news that is fresh. For the third time in 6 months, China has cut their interest rates by 0.25% based on the slowness of the economic activity. And this once again has sped up purchases on the Shanghai exchange, and the physical markets are continuing to increase in sales while we see people buying short gold and silver in the U.S. market and shorting it, betting on the gold and silver market to go down on the short term. And the most confusing thing, the call I get the most is, why is J.P. Morgan shorting silver on one side to keep the price down and buying silver to the tune of 55 million ounces over the short term? And of course, you've answered your own question. They're trying to keep the price of paper silver down where they can take delivery of physical COMEX silver until they get the amount of ounces they need for them and their clientele. Some people are estimating they'll go up to 100 million ounces of silver from the current 55 million before they change from shorts to longs and we get a quick jump in the price of silver. We continue to say, as long as silver's below mining cost, you've got a free 15 or 20% profit when it jumps back. Even if it takes 6 months, it makes no difference. You're still going to get a very nice quick profit on silver over a short period of time when you look at interest rates available to you. So we'll continue to recommend buying silver. Palladium now is pushing 800 again, and once it breaks through 800, we look for 850. It's a great metal to have small percentage of your assets in. And gold continues to be set up to be a currency. We continue to see the billboard advertising in China. Many of you asked me last week to send you a copy of pictures of the billboards showing the new gold coin, the renminbi. But once again, we don't have a time frame as to when they'll have a gold-backed currency. But many people believe it'll be tied to the new basket of currencies that the yuan will become another reserve currency along with the British pound, European euro, and the U.S. dollar and the Japanese yen sometime around October 20th. We don't have the exact date. But this will be very detrimental for the dollar, which will be very good for precious metals because the dollar will be going down. And we saw what happened when the dollar went down between 2000 and 2012. when the dollar was going down and gold and silver were going up. So we're now looking at the dollar down in the 94s. If it breaks support at 94, it could even go down further. This is being driven by liquidations from China, Japan, Russia, and India on U.S. treasuries. We've had like 5 straight months where they've been a net seller of U.S. treasuries as they continue to cut their exposure to the U.S. bond market. The bond market is still teetering on breaking. It's been in a huge bull market since the early 80s, and we know that market is near the end. I can't tell you exactly, but we've seen the U.S. 10-year Treasury and 30-year Treasury interest rates moving up, which is causing the bond market to go down, and this could accelerate at any time. So continue to be careful and weigh in on all these issues. If you haven't seen my webinar, go to ftmdaily.com and go to Precious Metals. You'll see the webinar right on the front page of FTM Daily, and it's an hour and 15 minutes. It's a slide presentation. It's worth your time as I bring into a lot of fundamental issues you need to be looking at as someone that's in precious metals as part of the portfolio. I talk about my recommended percentage of assets. I talk about the currencies I'm following that will be the biggest winner on the next drop. Look at showing you where gold and silver compared to stocks are since 2000, all factual information that you need to see. If you need to talk to us, you can reach us at 800-247-2812. That's 800-247-2812. And if you have any questions about having money in an IRA, precious metals IRA, give us a call and we'll walk you through that, how you can roll an IRA over and have physical precious metals in your IRA as a percentage of your assets. So hopefully we've given you an updated information. We'll hopefully have Greece out of our update, maybe again next week as we see what unfolds today and tomorrow. But hopefully after that, it'll be June before we start talking about it again. With this week's Precious Metals Market Update, this is Tom Cloud signing out.